Have oil prices bottomed? That's the question I asked Ian Taylor, the chief executive of Vitol, the world's biggest independent oil company.
Well, as always, we're trying to be as quick as we can. It means you have to be very careful about risk management, because obviously prices have moved a long way down, making sure you don't have any stock. I mean, obviously, to a certain extent, it's good for trading houses because we've got slightly less working capital requirements. But it's really, to a certain extent, it's same business no matter what price it is. You're looking to distribute physical energy, and if that's at $50 a barrel or $100 a barrel, the principles to a certain extent are the same.
But the marketplace still seems to be quite competitive. So, I mean, we've heard lots of talk about conditions being as good as 2008-9. That's probably a bit overblown.
I think that's way overblown. I mean, we had a very brief moment of contango in the end of 14, beginning of 15. But that's gone almost. I mean, most markets in crude oil are still in contango, still high crude stocks, product stocks relatively low, and we're still in very modest contango or backwardation, depending on which product it is. So there's not really the super contango opportunities that we saw when we had a real recession in 2008.
Are you surprised by that, or?
Not really. I think the markets are incredibly efficient, ship owners are very quick to respond if you ask them for a charter. They put the rates up very quickly. And of course, world growth, we're still, unlike 2008, 2009, when we had some real, falls, we're still, the world economy, albeit slowing down a bit, is still at, 3.5, whatever the World Bank IMF were out with at the weekend. And so there's still, relatively, good demand, and people haven't frozen up like they did in 2008.
Yeah, I mean, and just talking about demand and the global economy then, I mean, how are you seeing things? Do you think we're approaching sort of peak demand for oil at all? I mean, with China slowing?
Yeah, I don't think we're quite approaching peak demand as yet. I mean, we're still expecting demand. Most the forecasters, even ourselves, we're expecting demand to be another 1 million barrels up this year, and no reason why it shouldn't be another 1 million barrels up the year after. So not quite. I mean, obviously, we are seeing some efficiencies. Big countries like China probably moving their economy to a more consumer-orientated, gas-orientated growth. So yes, some less demand from places like China, but more demand from countries like India. US, tends to have more demand, particularly when it's growing and the prices are low.
So that's going to affect trade flows in terms of not everything's going to be going to China in the next decade. So we'll see pockets of growth. India could be one. There could be some regions in Asia.
Yep. No, absolutely. I mean, we're definitely, that's one of the fascinations of the business. The trade flows do constantly change. And you're absolutely right. We'll see probably, actually, ironically, less products coming out of India, because that's where the demand will be. And therefore, I think some of those big refineries in India won't be exporting so much. Obviously, we've got 2 big new refineries in the Middle East, which will be exporting more. But areas like Africa, South America, will unquestionably be importing more. Dare I say it, even Europe might be importing more.
Okay, and if we could just turn to the sort of the wider oil market. I mean, we've seen the BG Shell sort of combination come together. I mean, are you expecting to see any other deals like that in the industry?
Yeah, I mean, I know the bankers are talking about thousands of deals. I'm not 100% sure that there's many other oil majors, perhaps with one obvious exception, that is perhaps going to be very active in the short term. I think it's more likely still that the oil majors are still getting their balance sheets in shape for a lower price deck across the whole industry, and I think that takes more time. I think we're still more likely to see a smaller number of asset deals from the big majors as they look to sell off things that they don't really want at this price level.
And that could interest Vitol?
Potentially. I mean, obviously, we've been quite active in the last 2 or 3 years. We've got a lot of work to do with the assets we've picked up. But yes, I mean, obviously, if the right asset comes up, particularly if it's something we can bolt on to what we've already got, then for sure we'll be interested.
But asset prices, are they attractive?
Well, they're not cheap, Neil. I mean, I think obviously a lot of money around. Obviously interest rates very low still, and a lot of money in places like private equity. I think it means that, no, the market continues to be very efficient, and we're not certainly seeing, any bargains.
So you can probably guess what I'm going to ask finally here, Ian, just on the oil price. Do you think we've seen the bottom?
Gosh, Neil, I'm hopeless at this, as you know. I think we've maybe seen the bottom if you want to look at where we got to in terms of the final lows, particularly as we've got, obviously, the Iranian oil looks like it's going to be quite a little bit later. And we've got a few more weeks to get through until we start getting all the refineries running again. So I think still some chance for some weakness, but I think probably we have seen the bottom, yeah.
Okay, Ian, thank you very much.
Pleasure.